Imagine effortlessly spotting potential market reversals that can turn into profitable trades. That's exactly what this powerful free liquidity grabs indicator does for you. A liquidity grab occurs when the market price moves beyond key liquidity levels, like buy-side liquidity at recent highs and sell-side liquidity at recent lows. This movement triggers pending orders and stop losses from traders who place their orders expecting the market to reverse or continue trending. The influx of buying and selling activity creates a surge in liquidity which institutional traders take advantage of to enter or exit their positions. By capturing this liquidity, the market is then driven in the opposite direction, resulting in a significant price reversal. Traders who can identify liquidity grabs will gain an informed market bias to guide their trading decisions. Combining liquidity grabs with other trading concepts such as fair value gaps traders or order blocks, traders can identify profitable trade opportunities with ease. As traders may struggle to find liquidity grabs on their own, we've created our own liquidity grabs indicator, which you can use for completely free. This indicator will automatically point out liquidity grabs, making it much easier to spot potential reversals and trading opportunities. To add this indicator, open TradingView and click on the Indicators tab. Then search for the Liquidity Grabs indicator and click on this one by Flux Charts. I'll also leave a link in the description for easy access. Once you've added the indicator to your chart, it should look something like this. You can see green and red bubbles for bullish and bearish liquidity grabs, giving you a clear visual of where potential market reversals may happen. If we have a bullish liquidity grab or green circle, we'll look for buys. And if we have a bearish liquidity grab or red circle, we'll look for sells. Let's jump into the settings first, so that you are ready to start trading with this indicator. There are two main settings with this liquidity grabs indicator. The first setting is the pivot length. This determines how many candles are considered to form a pivot point or a significant high or low on the chart. A longer pivot length means the indicator looks only for more established highs and lows, while a shorter pivot length will identify quicker and smaller pivots. Thus, having a lower pivot length will result in more frequent liquidity grabs, and having a higher length will have less, but potentially more accurate liquidity grabs. You can adjust pivot lengths to your personal trading preferences. For short-term trading styles like scalping or day trading, go for shorter pivot lengths. With swing trading or investing, a longer pivot length would be better. The second setting you can adjust is the wick body ratio. This setting controls the ratio between the candle's wick above and below the body to the candle's body. The longer the wick is relative to the body, the stronger the liquidity grab. If you want the indicator to only show strong liquidity grabs with noticeable wick-to-body ratios, pick a higher ratio, such as 0.7 or above. A ratio of around between 0.4 and 0.6 can be used to find less aggressive reversals. The higher the ratio, the more the indicator will look for candles with longer wicks relative to their bodies. Now, as mentioned before, this indicator is especially effective when paired with fair value gaps. Quickly go back to the Indicators tab and search for fair value gaps. Click on the volumetric one by Flux Charts. Now that we've adjusted the liquidity gaps indicator settings to match our trading preferences and have added the fair value gaps indicator, let's use these indicators to create a simple but effective strategy. As you can see from this green circle, there's a bullish liquidity grab detected here. Thus, we will only be looking for long trades. The price is quickly shooting up after, forming a bullish fair value gap. Once the price retests this fair value gap, we can take a long entry. Set the stop loss slightly below the fair value gap and take a 1 to 2 risk to reward trade. Let's look for a short entry opportunity. From the red circle, we can see there's bearish liquidity grab, which means we are going to look for short trades only. As the price has shot down, it has formed a bearish fair value gap, which is now being retested. We'll take a short entry and set the stop loss slightly above the fair value gap, once again taking a 1 to 2 risk to reward trade. It's as simple as that. This liquidity grabs indicator is designed to help traders identify shifts in the market and make profitable trades off of reversals. By pairing this with the fair value gaps indicator, you can improve your trading with ease for completely free. If you found this video valuable, drop a like and subscribe for more. Also, make sure to join our free Discord community, where we share trade ideas, signals, and live trading sessions.